Hey everybody, this is Chip Harris again. Just wanted to get back with you on the housing market as I see it today, and wanted to discuss an article I read earlier. It was a Realtor.com article, and it quoted several economists and real estate experts in the article as saying that, as we already know, the housing market is cooling significantly. As a matter of fact, it stated that from August of 2021 to August of this year, there were 20% fewer home sales year over year from August of 21 to August of 2022. Home sales were down 20% that month. So that's a fairly significant drop, obviously. And we know that already. The interesting thing is, and it is a very weird real estate market right now, the interesting thing is there are fewer sellers coming onto the market, because if you own a home and your interest rate is at 2.5%, 3%, even 4%, and you really don't have to move, you may be wanting to move to downsize or upsize or whatever. But if you have a 2 to 4% mortgage, and you're going to move to either downsize or upsize, and you're looking at 7+% interest rate mortgage, it really deters you from the move. It deters you from putting your house on the market and then becoming a buyer. And so all that being said is, right now in this real estate market, it's very strange because fewer sellers are selling. They're staying put because of the cost of selling. And then fewer buyers are buying because of the cost of buying. And so for that reason, the market is going down in terms of the number of buyers that are looking to buy and the number of sellers that are coming on. Now, inventory is increased year over year, but it's not because of new listings coming on. It's because listings that are on are sitting for longer. And so it makes it look like there's more inventory out there, and there is, but it's not new stuff. It's just that people who have listed their homes are sitting on the market for longer periods of time and having to lower their prices. And so we're seeing a significant double-digit percentage of people who are having to lower their price after marketing their homes initially. So if you are looking to sell and you need to sell, make sure you consult with your realtor expert to price your home correctly, because if you overshoot it, if you think it's 2021 still, you're going to overshoot it and you're going to sit on the market and you're going to have to price decrease over and over again until you get it right. So just listen to your realtor expert and price it accordingly to today's market. And interestingly enough, the article also said that we are going to feel pain from a real estate market perspective, whether you're a buyer or seller, or if you're in the real estate business like I am, you're going to feel pain probably for the next 18 months or more. We are in a recession. Our recession is deepening because the Federal Reserve continues to raise interest rates significantly to tamp down inflation. But those inflationary pressures are also increasing interest rates in the mortgage world, which is creating a total unaffordability factor for people who want to buy homes right now. And so you've got the price escalation over the last couple of years that was a record-breaking price escalation or valuation escalation in housing, but you've also got higher interest rates that are causing an even more untenable affordability factor for buyers. And so to that end, the market will continue to slow. Now, what does that mean? If we are continuing to move into a stronger recession, if people have less confidence in the economy, they start feeling less confident that their job is secure. And we always talk about jobs. I always say, if people are working, if unemployment is low, people are making money, they're going to continue to buy houses, they're going to continue to buy cars, they're going to continue to spend money in restaurants and other things and go on vacations. If people start feeling insecure about their jobs, and even if they don't lose them, but feel like there's a chance they could lose them, that consumer lack of confidence will really affect the housing market further over the next 12 to 18 months. And so what the Fed's intent is to slow the economy to a crawl and almost bring it, seems like, to its knees so that it can tamp this inflationary pressure down, these inflationary rates down to their target of around 2.5%. Right now, inflation's up over 8% here in the United States on average. But, right now, my thought process is, and we did a video on this about 6 months ago, my thought process and my prediction is still holding true that the Fed will overcorrect if it hasn't already, and that by the end of 2023 or at the latest early 2024, they're going to be scrambling to lower rates to reinvigorate the economy, which I think will be fairly stalled or significantly stalled by the end of 2023. And so all that being said is we'll have to wait and see on that. But in the meantime, home values, and this is something that I had said earlier that I'm going to retract and come back to because I really didn't see this happening, but home values are decreasing slightly, especially in markets like North Carolina that I'm in, the central part of North Carolina, and other, smaller markets. Now, if you're in Austin, Texas, or Boise, Idaho, or Phoenix, Arizona, and all of these, even maybe Raleigh, North Carolina, to a lesser degree, where in price escalation and value escalation has just been out the roof, double digits for a couple of years, and in some cases even doubled. It's just those are the markets that are going to feel the most pain over the next 12 to 18 months as buyers continue to retract and as fewer sellers go on the market to sell their home. And so all that being said is if you're in a smaller market like I am, you're not going to be impacted all that greatly from home devaluation. However, it's going to happen. It is already starting to happen as we see the prices decrease slightly here already in 2022. So buckle up for that. But like I said in the last video I had out here, there is going to be an immense amount of opportunity for real estate investors or people who want to get into the investment world in 2023 and into 2024. Prices are going to go down, values are going to go down, but even more importantly, there are going to be people who need to sell their homes and need to move on to another property or another place, location, and will need to sell, in some cases, quickly. In some cases, people may lose their jobs and they need to sell to get out from under a mortgage payment, whatever it may be. Keep an eye out for opportunities in 2023 and early 24 if you are a real estate investor and you want to beef up your either rental portfolio or a short to medium term home ownership from an investment perspective, because there will be times and opportunities that present themselves that have not over the last 3 or 4 years. So with that being said, there is some optimistic news around what's going on in the housing market. But if you're trying to sell homes right now, if you're a person who's looking to sell or a person who's looking to buy, it's a tough market right now. It's a tough market. Doesn't mean you shouldn't be in it. I just want to prepare you for it and make sure you understand what's going on. So interest rates a little over 7% at this point in time for most people. Historically speaking, kind of just now getting back to the average interest rate from a historic perspective over the last 50 years that we've all experienced. But again, I say, if you're under the age of 40 in your adult years, in terms of your aging into purchasing homes, you've never seen rates over 4%. And it's a little bit shocking. And like I said earlier this year, there's just a consumer gut punch going on right now with the cost of housing. And so just be patient. That will change over the next 12 to 18 months, and there will be opportunities to buy. So until I see more news, I will wait to talk to you later.